The Goldman Sachs Services Index is up about 9%. That compares to a 13% return for the S&P and about a 7% return for the NASDAQ. So from the international investor perspective, clearly in the last 12 months, if you were focused on just domestic services stocks relative to what was happening here in the Sensex, and obviously a big composition of the Sensex is IT services, you would have been left in the dust if you had not participated in the market here. Secondly, on valuation, what we've seen, at least in terms of multiples today, we're looking at S&P valuation of roughly 16 times calendar year 07 and about 15 times calendar year 08. That compares to the Sensex, which has actually expanded in multiple to roughly 19 times 07 and about 16 times 08. So clearly, the valuation situation domestically relative to even the India growth opportunity is very clear. So what supports that? And this is probably the sort of important thing as you actually look at the valuations, because when you look at Indian IT services, and you actually have to separate even the Indian IT companies between their ADR listings versus their local listings, because you do have a slight disparity in the valuations given the premiums that the ADRs trade at. You're looking at multiples at roughly 27 times calendar year 08 for the Indian IT ADRs, excuse me, and then for the local market, you're looking at a valuation of roughly 18 times. You compare that to US IT services companies trading at about 17 times, and European companies, European IT services companies, so Capgemini, Tieto, and Zanza, and all those guys, they trade at about 15 times. So the question in my mind, I think, and what we are most guarded against is, is this valuation something that is supported by fundamentals or not? And I think when we sort of fast forward to the earnings growth opportunity, which I think has to support a lot of this, coupled with the return dynamics that I mentioned as well, we feel pretty comfortable with where things are, because if you look at the projected long-term earnings growth of Indian IT companies, and of course these are projections, we're expecting roughly 27.5% growth for the Indian IT services companies on the U.S. basis, and that compares to long-term earnings growth of 15% in Europe, where you get a little bit of a lift in the interim years from some major restructuring benefits and margin expansion, as opposed to real revenue growth. And within the U.S. IT services companies, we're looking for growth of about 12%. And I think you have the same phenomena there as well, with turnarounds and restructurings driving earnings growth over the next couple of years, as opposed to real revenue growth. So that sort of sets the context in terms of, I think, where we are. And with that, I will go ahead and turn it back to the panel.
Okay. Well, let me do one thing now. Let me ask Jayant, because he's got this unique perspective, both from a viewpoint of venture capital investing and also the IT industry, particularly the services industry, through all that he's been involved with NASSCOM. So let me ask him this question. The Indian IT industry has created tremendous value, tremendous wealth, about $150 billion, roughly, I'd say at the moment, is what it's created. So let me ask him, where do you see the right opportunities to invest? Where do you think more monies are going to get made?
Well, I think it'll be very interesting to have this debate across the panel, Saurabh. For whatever it's worth, my 2 cents or my two paisa worth of thoughts, I think what's emerging in India, at least in terms of the IT services landscape, is a very interesting divergence between what I would call the winning players and the not so winning players. And the winning players really are of 2 types. We have the very large global champions that are emerging, among the top 5 companies, TCS, Wipro, Infosys, Cognizant, Satyam, that are well on track to become $10 billion revenue players and $50 billion in market cap, and to contend with Accenture, IBM, EDS for the biggest contracts in the world. So these companies, and this is part of the NASSCOM McKinsey work, where we pointed out that we are in the process of creating these global champions. At the same time, as Ranu pointed out, there are focus players in India as well that are also demonstrating, the high growth, the high return on invested capital that Julio pointed out, that are also achieving very rich valuations and are doing extremely well. And they are winning because of these very focused strategies. I think what's going to be and certainly there is ample opportunity if you can get them at the right price to make lots of money with these winning players. I think there are also some very interesting consolidation dynamics that are possible that will allow you as companies consolidate, get acquired, to see a very interesting pop of 20-30% in these acquisition premia as well. So I think just if you look at the landscape in terms of the listed companies, there's opportunity on all those sides. I think, however, on the early stage and the venture side, it would be very interesting to get Mark and Rob's view as they survey the global landscape to think about where we could have some very interesting innovation-oriented opportunities. And I'd like to start perhaps first with Mark and ask him the following question. And really what we're going to try and do in the panel now is just have some questions among us and make them as provocative and interesting as possible so that we get some sparks flying in the room. And once we've done that, then I think we'll open it up for all of you to ask us questions and just see, whether you can really, create some interesting debate and discussion. I will ask for one important request, which is that when you ask questions from the audience, let's make sure they're questions and not speeches. So let's restrict them to questions, 2 sentences, and then we'd be happy to respond to those. But that's kind of the operating rules here. And just to follow those operating rules, my question to Mark, short 1 sentence, is how do you compare innovation in India versus China?
I think that when you look at India, you actually have people who understand the process from the beginning to the end. The criticism that I consistently hear from a China perspective is that they may know one portion of a long train, and they only know that portion, and they can't think outside of that box. Whereas an Indian entrepreneur and a U.S. entrepreneur can see a much broader issue and the long-term ramifications of certain innovation. And that's what a venture capitalist is going to be looking at long term, and they want to know not just what that innovation is going to be doing today, but what's going to happen 5 and 10 years down the road while we continue to invest in you. So I do think there is a distinction there.
And that's very interesting, Mark. And the question I would then have for Rob is, Rob, can we in India create a Google or not?
Of course you can.
So where would you invest on that basis?
Well, I'll tell you what we're doing in terms of our investment strategy right now. In terms of our firm, we're a relatively small firm, so we are focused on investing in companies that have their headquarters in the western U.S. But that said, already out of the companies that we've backed, and I will come around to your question, out of those 15 companies we've backed, 3 of them already have significant operations here in India. One of them in particular, a company called Tumri, 2 of the 3 founders are actually based in Bangalore, and 2 of the 3 key teams are based here, and we think increasingly going forward, you're going to find these multinational opportunities. I think there probably is an opportunity for a Google of India, and you really don't have to look any further than NHN and Naver in Korea, where Naver has really cleaned Google's clock, so to speak, and Yahoo Korea by really understanding the culture and the consumer and what they're looking for. And I actually think there is an opportunity. And when you look at Naver, which has 70% market share in Korea, the reason they won there is because they were able to deliver a service that the consumer there wanted. And I think that the real challenge for a Google, if you wanted to talk about search, or you wanted to talk about online consumer services, is that you have to get to a certain maturity and penetration of broadband and consumers and people that search that way. But I think there's probably something that's analogous in and around what's going on with the use of mobility today. But I do think there's the level of creativity here that allows entrepreneurs to come up with something. It's hard to imagine what that is today, but I do think that it will happen.